Well, the big three here in Oz, we've had a preference for Santos for a while. That's worked really well. That's the best performer on a 12-month view, and we suspect that could well be the case as we go forward as well. We struggle a little bit with Woodside in the sense that the production growth is not as strong as what we see in Santos, and we still think the capital allocation or the capital management side of that business is not clear to the market. And I think with the management team and board going through some changes and refresh at the moment, that is unlikely to be clarified in the near term. So, yeah, Santos remains our pick, strong production growth and, the best of the management teams at the moment.
John, let's move on to tech now. Now, the Nasdaq overnight trading on another record high driven by Microsoft price action. But what are you seeing here at home? Is it a sector that you still like?
It's fascinating. We're seeing on the back of the pullback in bond yields on a 2 to 3 month view in the US. We've seen quite a big rotation into tech, despite the popular press at the start of the year. And part of that was just I think prices had come back, but it's not just the Microsofts and the Apples which are at or close to record highs. It's also a lot of these really high growth US stocks, DocuSign, Shopify. These are all price to revenue stocks, and they're all trading at all-time highs. So I think the earnings story for a lot of these stocks probably hasn't changed, and I think locally our tech index has lagged what we've seen in the US. I think there's room for catch-up. I also think investors are getting very conscious that, at least in the US, we're now 2 weeks away from an earnings season. Suspect the US technology earnings season will be very well supported. And, of course, we're 2 months out from our local earnings season. So I think there's just a bit of repositioning here ahead of what's been a pretty ordinary sector for Australian tech